Hi everyone, I'm Kathy Quaid with Quaid and Rooney Real Estate. I'm here with Todd Gosden from Compass Mortgage. Todd is one of our preferred lenders and a friend, and he's here to help us help you with the myths and questions that come along with buying a home.
Okay, let's talk about that. Well,
so
ta-da! I think one of the myths we should probably have a conversation about, how many times do you sit down with a client and there's a conversation about interest rates?
All the time.
All the time, right?
Mm-hmm.
And obviously we've been in an environment where we went from January of 2022 to December of 2022, and rates went up 3.5%, which most people have never seen before. And actually that's true because it's historical. It's never happened like that before. So there's a lot of shock from the marketplace going, what do we do? When is the right time, right?
And to stop for just 1 second, everyone out there, the interest rates are still very low. They're not incredibly high. This is not back when they were 17 to 20%,
right?
Which I think people out there would think right now.
And even if we look back over the last 25 years or so, the average rates are somewhere 5.3%. If we go clear back to the 70s, they average around 7.5%. Mm-hmm. This is not the end of the world, meaning that rates got to that point of 7.5% sometime at the end of last year, 2022, and rates are already trending down. Mm-hmm. And people have to remember is that interest rates will typically follow inflation.
Right.
And as we see starting to declines in inflation here in January of 2023, the interest rates are starting to follow. And that's what all of you need to know is that as we start moving through this year, the first 60 days are going to be some tough ones.
Are you seeing the interest rates still climbing a bit and then they're going to fall? Or
no, I think we're going to see some drifts. We're going to see some hiccups along the way. And I think people forget that our economy is also international.
Right.
So there's things happening around the world that we can't control. But what I can tell you is that all signs are pointing towards rates continuing to drift down just a little bit.
Good.
I'm thinking that by the time we get to the spring market, and we can talk about that one moment, we most likely will see rates in the fives.
Okay. Oh.
5 to 5.5%, and that's historically correct.
Right.
But I think that the most common thing I run into every day is somebody saying, is now the time? Should I be waiting? Well, my response is, well, you should buy what you love, because you can always refinance it later. And I think that's an important message for everybody to understand. But it's also important to know that's why they have a trusted professional like you guiding them through the process.
Right.
You're helping them understand why to buy now, because what happened in 2021-22 when the market was going crazy, we have a demand issue and not enough inventory. We had 20 and 25 people looking to buy houses because interest rates were so low.
Which is something that we want to touch on right now, is when people are asking me, should I start, looking for homes now, or should I wait until March and April? Well, here's what happens. We are in the spring market as of January 1st.
That
is considered the real estate spring market. And in that case, things are dribbling on. And what we always tell our sellers is dribble on because you don't have as much competition. Well, we're telling our buyers the same thing. Get out there, be prepared. Have Todd give you a pre-approval. You're sitting there, you've already talked through what you want to spend on a home. You've told us your wants and wishes. We're out there looking for it. You're not up against the spring people that have thought, I'm waiting until all of the inventory comes on. And then you're up against 20 people, looking at the same house because there's so few houses.
Well, I think that's great because people have always thought for a long, long time, as long as you and I have been doing it, November through February, no one buys houses. That's a false statement.
That's a false statement.
That's a myth.
That is a myth, yes.
Because there are real buyers and real sellers in those months, and a lot of people don't realize that if you've been in the industry long enough, those are sometimes some of your best times of the year to be buying and selling homes.
Absolutely.
So people don't realize that because what they read or what they Google is like, oh, we got to wait till the spring market, curb appeal and all those things. No, that's not a true statement. What's a true statement is we're here to empower you. We're here to educate you of the right time, the right locations, the right streets, the right neighborhoods to where you're going to find value in future growth of your equity, right?
Right.
Is people don't realize growing wealth in real estate is one of the greatest things you can do in your lifetime.
Right.
Real estate always outperforms, right? And you'd agree with that, right?
Absolutely.
So I think that's a myth that we need to get everybody across is rates are going to come down. There's never a bad time to buy something you love.
No.
All right. These are the biggest decisions that you're making in your life, and it's important that you find the right experts to help you do this, because this is all we do for a living.
Right.
Right.
And I'm going to quote Todd because I'm stealing it from him. He just said it a few seconds ago, is that you marry your house and date your rate. So rates come and go and you can refinance. That if you find a house you're in love with, do not think I can't buy that now just because the rates seem a little high to you. They're not high enough to stop you from buying a house.
No. And I think the important thing that people need to realize, here we are sitting in January of 2023. If we just look back over the last 60 days, generally speaking, we have created about $50,000 in purchasing power for the buyer. Now, what that means is this, is that if you're out shopping for a home 60 days ago and you were looking at a $250,000 house, because rates going down, you could be looking at $300,000 houses for the same mortgage payment you were looking at 60 days ago. That is something you need to know, and that's what the experts bring to the table. Is that's very helpful.
Now, bringing up that point, so I'm going to play devil's advocate now. Now, if there are people going, well, wait, if the interest rates are going down, should I wait then? Because that'll give me that much more buying power.
Right.
What do you say to that?
Well, what I say to that is this, is that, again, when you find the perfect home, okay, that's when you say, that's what I want.
Yeah.
Anytime you are looking to time a market, whether it's the stock markets, the bond markets, the interest rate markets, remember that everything is international now. The sneeze by somebody can change things. So you don't want to do that. This is the biggest investment of your life. This is where equity is going to be built for your future and possibly your legacy. Buy what you love. Right? And this is where the professionals come in and can help you do that.
100%, I agree. We are in agreement on that.
We are in agreement.
Yes.
I concur.
Okay, so we've got the interest rates, whatever. You can take care of all of that stuff. Next question for you is, for those of you out there, I had somebody say, oh, I'm not a first-time home buyer. I wish I could be because I could use an FHA loan.
Yeah. Well, okay. So the answer is FHA is...
What does FHA stand for?
Federal Housing Authority.
Okay. It does not stand for first-time home buyer.
No.
Some people actually think that's what it stands for.
No, an FHA loan is just an opportunity to maybe fit into one of those boxes we were talking about. You know, when you start painting a financial picture and really understanding someone's story financially, all we're trying to do is get an idea of where they're at, what things look like, so we can start looking at all the different options for you that would hopefully lend itself for you being able to be a part of making the decision to what's right for you when buying the most expensive investment most likely in your life.
Okay.
Right? FHA is an opportunity. It's an opportunity to do something maybe if you're struggling a little bit with credit in the past. Maybe you have a lower down payment. But a lot of people don't realize when they start talking about the term conventional loans, most people think when you're doing a conventional loan that you have to put down 20%.
That is another myth.
You
that
do
is
not have to
incorrect.
do that. Believe it or not, most people don't realize in a conventional loan you can put as little as 3% down.
Yes.
Right? So sometimes...
And what is that based on?
What is
credit
what?
rating.
Credit
correct?
rating. Right.
Okay, so if you are putting down less on a conventional loan, you need to have a stellar credit rating.
Well, I would
correct?
say 720 and above, meaning
Okay.
you could still do that 3% being lower in credit, but the interest rate would be much higher.
Okay.
The
Now
di-
let me ask you this. Can you get a loan if you don't have a 720 in your credit score?
Of course.
Okay.
Yes.
That's another thing.
Typically, you can do nowadays buy a home down to probably a 620 credit score.
Okay.
That changes from time to time, but there's not been many times in 27 years of doing this that we couldn't find an opportunity for somebody. And the opportunity is also, you know, one of the most important things I can say about this journey is that you start early for a reason. If you honestly are waiting to look and buy a home in March, April, May, start today. Let's
You're
figure
working on your credit?
working on anything. Let's
Okay.
paint the financial picture just to understand what you're dealing with, because none of us care about how much house you're buying. We care about what your monthly payment is.
Right.
That's what you're living with. That's the ball in the chain, right? If we start early, if there is a problem, it gives us an opportunity to fix it, make the adjustments. Let's say, for example, we have plenty of clients come in that their credit score is, let's say, 680. By working with the credit bureaus, you have opportunities to raise that credit score. Because why is that important? Because it gives you an option of having a better interest rate, which saves you money.
Okay.
And money over the long term is going to be really important to the legacy of what you have when this is all said and done.
Now, question for you. If somebody runs their credit, this is another myth, I think. I'm going to see how he answers it. When you're able to run your credit, does that put a ding on your credit rating?
So technically, as mortgage bankers in the mortgage system or the banking institutions, as Fannie Mae and Freddie Mac, have the ability that many times you can pull the credit up to 10 or 12 times within 45 days.
Okay.
Typically, when you pull your credit once, it's good for typically, 90 days,
Okay.
120 days, depending on the company and all that sort of thing. But the reality is, when you're looking at credit, is we want to make sure that once we pull it, it's good for all banks.
Oh, okay.
So we work with dozens and dozens and dozens of banks. If I look at your credit one time and I can look at all those banks, then it takes care of itself from having to pull it that many times. Usually when your credit were pulled, it'll affect it 1 point, maybe 2.
Okay.
But that is recovered once you get beyond the month, beyond that date of being pulled.
Okay.
So the credit is this. A lot of times also, what we try to do for people is they just don't want to hard pull on their credit no matter what. No matter what whatever it is, they just don't want to do it. That's just something they have in their mind. We can also do what they call a soft pull.
Okay.
And a soft pull allows us to see what's going on, see your credit scores, and still be able to get that file in front of an underwriter just to look at things.
So that would be considered a pre-approval?
Yeah.
Okay. What is the difference between being pre-approved and pre-qualified, and is there any difference?
Okay, so as long as the two of us have been around, pre-qualifieds were very much in existence.
Just started last year.
Yes, very much in existence for a very long time. Pre-qualification means nothing more than, hey, we're drawing something on a napkin and having a conversation. A pre-approval means where we're going to ask you to send your W-2, we're going to ask you to send your pay stubs, your bank statement, just those 3 things, so we can run them through what they call Fannie Mae and Freddie Mac's automated underwriting system, or the FHA system, or the VA system. It gives us an opportunity just to validate that you're good. Typically, there's never an issue because no one lies about their income or their assets. And once we do that, we can actually have our underwriter look at it. There's actually programs, what we call Get Committed. And Get Committed is where you have the opportunity today to underwrite your file so your loan is already approved before you actually start looking.
Oh.
So technically,
So when you bring in the contract, you're already
you're done. All you have to do is your title and your appraisal, and you typically can close within 15 days. So there you go. That's what that's leveraged to you doing the contract and negotiating the opportunity for the client is we can close in 15 days as long as both clients are willing to do so.
Okay, so now this is a little bit of a segue also. So I do have people coming to me saying, okay, we're a first-time home buyer, we're renting right now. Our lease is up. Let's just say, in fact, I just had one. So we're in January right now. Our lease is up in June.
Yep.
Is it too early for me to start looking? From my point of view, I, as the person writing the contract, we always think, oh, that's fine. We can go out 60 days. Then it's a month before you make another payment, correct?
Right.
So if we were to close, you wouldn't pay until the month after the next month. And so you're in a good time zone. For you, how long can they lock?
Well, so a couple things there. So let's say, for example, if you found a place you closed in April, your first mortgage payment is June 1st.
Okay. Did everyone hear that? I want to make sure everyone heard that. Say that again.
If you close in April, your first mortgage payment will be due June 1st. If you closed in June, your first mortgage payment will be August 1st.
Right. And people don't
It doesn't resonate.
get that. It doesn't resonate. Yes.
Yeah. So then the other question was, what you just asked?
So can you close, how long can you lock into the rate that you write the contract, submit it? When can we, as the agent, say, that's okay, we can close in 60 days?
Yeah.
Or can we close in 90? How long can they push that out?
So you typically can go out 88 to 90 days.
Okay.
If you go over that, typically the banks are going to want you to put some sort of deposit down.
Okay.
And that deposit obviously will get back to you at the closing. Here's the thing everybody needs to know is typically once you get beyond 40 days, the interest rates start going up a little bit with the longer the term of the lock. And the only reason for that is what they call interest rate risk.
Okay, so you are paying a different rate after 40 days?
Typically what I see in the trades is that you get beyond 40 or 45 days, it starts climbing a little bit.
Right.
Some days the 30-year rate and the 45-day rate are the same thing. But once you get out long enough, remember now, a lot can happen in 90 days. We saw over 60 days rates go from this to this.
Right.
So it's very volatile. People don't realize that interest rates move a lot like stocks. An interest rate can technically change 3 or 4 times a day, and people don't realize that. They call somebody at 8 o'clock in the morning, call somebody at noon, and it's a totally different interest rate. They think it's better. It's not better. It just moved because the market moved it.
Okay.
So interest rates, generally speaking, would be the same at every bank, because if they're purchased at the same time, or if we look at an interest rate at the same time, likely they're going to be very close to the same in most every bank.
Okay. Well, that's a lot about interest rates.
That's a lot about interest rates today.
Then most people are like, okay, wait, I just wanted to know what FHA.
Yeah, and just so you know, there's always exceptions to that. There's
Okay.
always little things. People, when you do this, they take it to heart. That's what they said. Things can change and move. Ideas can change and move.
Mm-hmm.
You go out long term, it can be really great, and the next day it can be really bad.
And also, I guess the biggest point we're trying to make here, which is why we had Todd come in, everybody, is that you need to talk to the lenders because of the programs they have. We, as your agents, feel as if, at Quaid and Rooney, we feel like our team also is Todd. So we have, a good plumber, and we have a good carpenter.
That's right.
But we have a good lender because we are experts at finding you a house and digging in and finding you the exact house you want. But you ask us about lending, and we're going to say, hello, because we don't know. It changes in his world every day, just like ours does. So
That's
it's
right.
important for us to hand you off to someone that we know will not drop the ball, will be there to the closing with you, and talk you through everything as if, even if it's your 6th home, he will talk to you like it's your first. You don't always remember everything.
Well, and we're in it together, right? We
Right.
both have unique expertise. We both probably could cross over. And I always say, this is her lane, this is my lane, this is what we do best. But we're here ultimately, again, to empower, educate, and get you to the place where you want to be with the least amount of effort.
Right.
Right?
I mean, our job is to take on the stress for you. We should be handing off an easy flowing system for you.
It's a process.
Right.
And we've done it thousands and thousands of times. And the idea of it is that everybody can have a great experience. And that's what you need to know, because a lot of times what you
Absolutely.
hear is people have bad experiences. Bad experiences, who knows what the reason was, but I think that people need to understand, the more you understand, the better the experience gets.
Right. So we are here and trying to educate you. I'm going to grab my phone right now, not to answer it, but I have my questions on here and just want to make sure that we had people that were asking that. We had discussed this right before we turned on the camera. If someone gets an interest rate,
Yeah.
I want to get rid of this myth.
Okay.
Back in the day, they used to be able to refinance within like 6 months for free.
The answer is, okay, so whenever you close a loan, most banks want you to hold that note for at least 6 months. Okay. The answer is, you technically can refinance anytime you want. Okay. The reality is, nothing is for free ever.
Right.
So to give you an idea, we're always looking for is, if Kathy here and her husband Brian were refinancing a house, here is the lowest possible rate for the most cheapest cost. Right? Now, if you raise the interest rate up a little bit above where we're having the conversation, the banks will actually create an environment where the lender is making more money to where they can actually give you credits to pay for it. So there's nothing free. All it means is that you're paying.
I'm not working for free.
You're paying a little bit higher interest rate to have the cost being paid for you.
Okay.
So then it becomes a mathematical equation: is it better to pay the cost or better not to pay the cost? And the idea of that is just pure math.
Right.
All we do is the math. And if there's the belief that interest rates are not going to keep going down, then it makes sense for you to pay the cost. And if not, then it doesn't. And it also depends what you can afford.
Right. And that would be called a phone call to Todd. And he will get all the information for you.
Right.
But obviously, we're doing this simply because we are hoping to have people start to reach out and send us questions. So we are going to be posting this on our social media, obviously on YouTube. I'm sure we're going to get that out there as well. But what we do want is for you to reach out and ask us questions. If we don't have the answer, we hand it off to Todd. Or if Todd gets the call and he's like, I don't know, ask Kathy. We will get those answers for you. But My big thing right now is don't trust what you read on Google.
Yeah.
It's not, Google's a wonderful thing, don't get me wrong, but you need to ask experts because this environment changes so much that what your neighbor told you they did last year or during COVID, that is gone. We're not getting 20 offers on a house and people aren't paying $100,000 over. You need to talk to us about what the environment for housing is.
Yeah.
You need to talk to Todd about what the environment is with lending. So that changes all the time. So we just want to make sure that we are informing you guys, educating you guys, and giving you the opportunity to own a home, which is a right in the United States for everyone to be able to own a home. And we want to make sure that everyone gets a home that wants a home.
I couldn't agree more. I think people get caught up in the idea that everything stays the same because their neighbor did it. Believe it or not, the market changes every day.
Yep.
Every day is a
Every
different
day.
opportunity, whether it's plus or minus, that you got to live by.
Yep.
There you go.
Thank you, Todd.
Thank
and we're going
you.
to have him back because we're going to come up with other questions. So we'll have Todd back and then we'll do another fun video.
Have a good day, everybody.